Good morning. This is Carl Dakin, and this is the Successful Funding Show. This is a weekly show that I put on as a consultant, as an advisor, as an intermediary matchmaker on raising funding, where I try to take entrepreneurs and new opportunities and match them up with different funding sources. And through this show, through my daily newsletter on LinkedIn, and through my chat GBT avatar, the coach on my website, I try to provide and share information that I've learned about raising funding for all kinds of projects, all kinds of people, businesses, charities, community things. And today we're going to be talking on the topic of fact checking. This was the topic last week, and it got into depth about trying to figure out who's on the management team, who they are, what their qualities are, what capabilities may be present or missing, and all those other kinds of things. And we probably could go on that topic for additional time. But Michael was hoping to join me last week, could not. So I have with me Michael Feely today. And we're going to shift the focus of fact checking slightly to talk about fact checking the organization. That's the whoever is the center of the action on bringing in innovation to market, on running a business, running a community project. Could be a charity leader, could be a faith person or a acclaimed faith person who's raising funding. And the question is, who are they? And this is from the perspective of the person who may write the check. They need to know that they can trust the person, that they're capable of doing what the project's all about. And we're going to talk about how would we determine that? How would we validate, verify that, so that if we're sitting in the seat of the investor, this is information we'd want to get, how we'd go about getting it. And if we're sitting in the seat of the person seeking to raise funding, the question would be, how can we help the investor get the information they need so they can choose us to write the check? So with that, Michael, welcome to the show this morning. Welcome to the audience. For anybody who's listening in this morning, feel free to ask a question or a comment as we go forward. So Michael, to kick things off, for those who don't know you, please provide a little bit of background about yourself, and then we'll start diving into some of these questions.
Hi Carl, thanks for having me. Michael Feely, originally from London, now live in Denver. Excuse me. Most of my background is in sports development. Went to the University of East London, University of Stirling, performance coaching. I ended up in the US and in Denver coaching a women's rugby team, the Glendale Raptors. Won a national championship. Amongst a series of adventures or misadventures, I owned Mick Mullen's Irish Bar. We won Denver Westward's Best New Bar 2020, 2 days after COVID lockdowns. I spent another 2 years trying to drag that huge rock up a hill. In the process of doing that, I got involved or founded Citizen Sports. We're focused on sustainable sport, making sport more affordable, more accessible to youth or communities, organising sport slightly differently or more efficiently, directing funding more efficiently in terms of kit and equipment and other major expenses that make sport more prohibitive, and gained a little bit of experience in raising capital and going through the drill a few times. I think with Mick Mullens, we ended up raising 1.7 million. It's interesting you say about can you trust the founders or the people raising the money, but what are their capabilities? I think in hindsight, I wasn't necessarily as capable as I could have been or should have been at the time. And like you say, the road to hell is paved with good intentions, but the road back is paved with humility. And that's learning from your mistakes and understanding that, okay, these are my strengths, these are my weaknesses. Here's how I'm going to plug those gaps. And, you know, with the pub, it was a little bit on the fly sometimes. We had to pivot quite drastically at times. Obviously, with COVID, everyone did. But yeah, it was a huge learning experience, and I think I'm wiser for it, and happy to share my experience and ideas and see where it takes us.
Yeah. So before jumping forward, I'm going to step back a little bit and create a little bit more framework. When you're raising funding, there are different levels and types of funding. When you raise funding in the form of a sale of ownership, where you give your money to someone else and hope that they convert that into something valuable, you're engaged in what's called the sale of a security or a regulated investment. And at that time, you are held to a high standard in how you conduct yourself, what you do, because you are entrusted with the money of your investor. And there are all kinds of laws and regulations that are there to make sure you toe the line and you do what you're supposed to do. And so I bring that up because quite often entrepreneurs, other people come to me and they say, well, I don't want to raise funding. And by the time we break it down as to what type of funding, what kind of offering it's going to be, we're talking about the sale of securities with all the regulations that attach, which makes it time consuming to get everything in order, time consuming to meet the requirements, time consuming to share information. There are lesser forms, such as selling your products through a Kickstarter type of campaign. There are charitable donations where you give your money away with no expectation of getting anything back other than maybe a warm heart from your good thoughts and feelings when you wrote the check.
The warm and fuzzies.
Yes, the warm and fuzzies. And throughout all of this, if you're the person telling the story, making the pitch, your purpose in making the pitch is to give that investor candidate enough information that they can make a decision. And it's supposed to be a fully informed decision. And the higher up you go from charity to security investment, so goes the responsibility and the depth of information you're supposed to provide. Michael brings out a major point, a major issue in funding is that if I were to take all of my experience in raising funding, I would say that I've encountered three kinds of information that is false. There's the information that is given to me by somebody who intends to steal from me. This is a thief, a robber, a criminal, and they are trying to take my money and give me nothing for it. It might be simple reaching into my pocket as I walk down the street like a pickpocket. It could be as complex as a bank robbery, but more often somebody's putting an offering on the table, making false statements, knowingly false statements about it with the intent of asking me to invest into that particular project, and they're going to take the money and run. They're not going to deliver anything. It gets a little bit grayer when they offer you a little bit of something that is intended to be way short of what they promised you. So it kind of looks like it. And this is why we call it a scam sometimes, where there's a touch or a taste of value, but you're not going to get what you thought you were going to get. The second level of falsity is when someone tells you that something, and they really don't care if it's true or false. They're not trying to steal from you, but you're relying on that information to make your decision. You're maybe relying on the individual to do something, and they don't sometimes because they don't care. It doesn't matter to them that they did not perform. It doesn't matter to them. And this is sometimes called a sociopath or someone who just doesn't recognize your moral system, your values. They don't respect property ownership or your property. Everything is just too loose. And there's a number of those people running around. The first group, there's a few, very, very few. The second group, there's more. There is a book written called Snakes in Suits, which talks about in corporate America, the number of people running around who just are oblivious to other people's value systems because they're all doing stuff in their own self-interest. However, the biggest threat to an investor, to you as an entrepreneur, are people who want to do something that don't know what they don't know. And there are things like, as Michael talked about, you get hit with COVID. If I polled everybody on March 19th of 2020, and said, what do you know about handling a pandemic? Nobody had an answer. Okay. And we were all shocked into a brand new experience that we were unprepared for, of a size and magnitude that was beyond comprehension. And so at that point, no matter what we told everybody, we had to stop. And in some cases, it probably would have been more prudent just to shut down what we were doing and say, this isn't going to work. Yeah. But we didn't know. We didn't know it was going to work. This is the biggest threat, I think, to us as entrepreneurs and to investors, is talking about something that we don't know the answer to. There is no ability to tell somebody this is going to happen this way, and a new innovative product or service is going to create a situation where you're doing something for the first time. You're experimenting by definition, but you're engaged in business. So it's not supposed to be an experiment. Yeah. It's supposed to move forward. So we all, as entrepreneurs, will get caught out from time to time where we say we're going to do something, we think we know something, and we find out afterwards we didn't know as much as we thought we did, or there was something really important that we wish we would have known before. And this is acceptable in the sense that we all make mistakes, we all have errors, we all sometimes underperform where we want to be, we don't achieve what we want to. But this is not fraud, it's not a crime, it's simply bad information. And so when we talk about fact checking, looking at this from an investor standpoint, first we have to ask ourselves, do we know everything that we need to know in order to do this? And sometimes we don't. Quite often we don't. But our goal here today is to go, okay, let's ask the question, what do we need to know? What do we need to share with the investor candidate? What do we want to share so that they look at us and go, these guys are thinking this through? Michael and I were engaged in basically a consultation yesterday with a new company coming out of the ground. And we were asking these questions of the people who had the idea, coming at it from our backgrounds, our experience, which was not dead center with what they wanted to do, but it brought a new perspective, a new look, allowed us to ask questions, which helped them understand better what they knew and what they didn't know, yeah, and what maybe they need to know, or they need to hire somebody onto their team as a contractor, as an employee, maybe even a board of director or an advisor, that bring that knowledge with them to the center of their new opportunity so that they do know what it is they need to know. And this is kind of what we want to talk about today. If we're looking at a business, an enterprise, a community project, what does the investor need to know? And how can we verify that what we're seeing, hearing, and reading is correct? So with that, I'm going to throw it back to you, Michael. If based on your experience and knowing that things can and do go wrong, but if we're looking just at the entity, what would you want to know, and how would you prove it's real? And I've got my checklist, but I'll let you go first, and then we'll jump back and forth through the remainder of the hour.
I thought it was funny when you were talking about more informed, and what information, etc. And what sort of popped into my head was that sometimes the more information you provide, the less informed you become. It opens up far too many questions sometimes that aren't particularly relevant. I think that first and foremost, you have to be very clear about your fundamental business. What is the structure? Whether that's ownership levels, how you're going to structure capital campaigns, what's your staging. That gets into sort of the pro formas and the numbers and projections and how long is that going to take. But also, how does that fit within the current marketplace? How is that going to then inform your business strategy? What personnel do you require from an operational point of view in order to fulfill or achieve that strategy and enter the marketplace and be successful? That brings a whole host of other questions in terms of like the initial personnel, what's their background, what's their qualifications. I sort of made a little note to myself here, but pre-existing relationships or pre-existing ideas or so on, it's not really any different from an insurance company for health insurance. What are your pre-existing conditions? Because at the end of the day, it's CYA, right? Cover your, can I say arse?
Assets. It's called assets. Cover your
Right, so
assets.
there you go. And that's what it's for. It's checking the background, checking the history, making sure you have as much detail as possible so that you're as informed as you can be. But at the end of the day, it's still a risk. That's why you have in the offering documents, all investments are a risk. There's no guarantee, so on and so forth. But it comes down to when the people are talking about what their idea is, how they fit into the market. It's got to be about more than just passion. It's got to have solid information behind it, real facts, true data to back it up. Sometimes raw data is a little bit better because you can make your own inferences rather than relying on someone else's inferences that would support what they want it to support, particularly from my background in sports development. When they talk about youth participation numbers, like I understand how they fudge those numbers. We talked about that in the meeting yesterday, and participation rates are just a myth, really.
And this is a really good point that as I'm looking at the question of fact checking, last week I presented on the management team. Today we're talking about the enterprise, the business, the entity that is going to do all the things that are there. Another topic which we may not get to today would be if you have an innovation or technology, what is it? How does it work? This is diving into the product or service so that you can better understand how well it will perform, what kind of benefit it'll generate. And then we step, as you say, into the marketplace, which is, so you've got something cool, but who cares? Will somebody pay for it? Will they pay a price that's greater than your cost of production or delivery? Mm-hmm. And so there's all these different buckets of information that are out there. And in doing this, you want to check each of the buckets. It's not check the box, it's a bucket. It's a deep well of information. And ask yourself, is this information complete? Is it accurate? Is it deep enough that it's suitable for a person to make a decision? If I'm making a $100 investment in an investment crowdfunding campaign, I can't afford to spend 10 hours of my time reviewing documents and so forth. It's kind of a drive-by, fly-by examination. Does everything look like it's there? Does it look like it was written by somebody who knows what they're talking about? Does it make sense coherently that this item is going to be valued by the marketplace and these people can bring it to market? But we're moving at speed of light in looking at that review. As the dollar amounts go up, the number of hours spent in review should go accordingly. And Eric Bellamy did a study for angel investing that said that the average angel investor should spend about 44 hours in reviewing each opportunity in which they may invest in order to improve their hit rate, their success rate, which is obviously too much for a small dollar investment. But if we get into large dollar investments, in the hundreds of thousands, millions of dollars, then we might be looking at, weeks of study and understanding before somebody's going to write the check, because the amount of money spent in review, due diligence, assessment is small compared to the overall size of the investment.
Yep.
So in looking at an entity, if it's brand new, it's a startup, it's out of the gate, there's really not a lot about the entity that you can find out. You want to know what kind of business structure it is. You want to know what state or country it's registered in. You want to know how the operating agreement or the bylaws or whatever governing internal rules are set up. And you want to look at all the minutes of the meeting and how they set it up, who got authorized to do what, who's been appointed. And a lot of these documents are not created when the company is set up. Sometimes they're never there. And if you don't ask to look at them as an investor, you may not realize that a lot of this stuff was left up in the air. It's there to see. When you go through as an entrepreneur and putting things together, you should have a checklist going, I expect a reasonable, sound, solid investor is going to ask me about this, and I should be prepared to give them to this. And I've talked last week about you should create some kind of online storage account, whether it's Dropbox, Box.com, or something else, where you can put the documents that you expect an investor to ask about, so they're handy, at the ready, easily accessible, where you can share those with the investor. But I see we have a guest this morning, so I want to give a big shout out to Sean Hermanson. Sean, welcome as a guest in the show. We're talking around and about some of our meetings yesterday, which included Sean at one point. And there are more things to add to the conversation beyond what we talked about yesterday, because the day wasn't over. But looking forward to some very interesting and creative extensions of everything that's going on. So Sean is an entrepreneur. He is bringing to market a new product that is tied to the golf industry, which is tied to smoking cigars. And I happen to have one of the original products here, which has the magnets that we can stick on something magnetic, which fortunately doesn't work there, and the tees and things in the bottom. So Sean is having a really good time bringing this to market. So big shout out to Sean. Thanks for joining in this morning and viewing the show. So Michael, as we're getting on, back to topic, as we talked about, it's so easy to go off target, as we say, to go, oh, well, how's the war going in Pakistan this morning? Or did you see what the Trump administration did yesterday? Has nothing to do with what we're talking about.
Yeah.
And therefore is a distraction. It's getting off topic, as we call it. So if you're looking at a business that's been around for a while, it gets a little bit harder. But what would you think to look for? How would you be able to find that information if it isn't given to you directly by the entrepreneur? How else would somebody get a hold of some of this information?
Well, first thing is you had said, does it look right? Does it look like it should? Is it all above board? That kind of thing. Whether that's a new business or an existing business, you can polish a turd all you like, but it still smells funky, right? FTX would be an example of that for me, or any one of these other number of young entrepreneurs that have ended up in jail. So it really is, it is a challenge sometimes to do your due diligence. It is, particularly if they're a thief or a liar, like you said, sociopaths, where they're manipulating information or outright fabricating information. Simple things. Step one, oh, we're a company based in such and such. Okay, we'll go to that state's website. Secretary of State website will have records, and there'll be business filings and information. You can see things as simple as, are they up to date on their documentation? Now, is it, oh, this has been filed late, but they've remedied it? Okay, that's fine. You're busy, you're a startup, you might be working a full-time job and doing this on the side. Things like that aren't necessarily a red flag. But if there's other information and tax filings that are out of date or not quite right or not adding up, if you can obtain certain pieces of information like that you're then able to compare to a pro forma or projection that someone's offering you, you'll be able to sniff out pretty quickly how much of a turd they're polishing, or if it is what it is or what they say it is. There's lots of ways to do it. I think that the longer a business goes, the more information they should have that's accurate and relevant based on present operations or situation. And sometimes those are a little bit easier to invest in, even though they might not have seen enough traction or the sort of growth that they wanted. You can see that it's operating, that they've got their fundamentals taken care of, the paperwork's all in place, certain people are in place, and then you can understand if there's any sort of mitigating factors to why didn't they achieve quite what they wanted to in the first go round. Could have been time, could have been the market, could have been unforeseen circumstances like a pandemic, any number of things. But that's where you start to build a better understanding of the story. There's more detail or more colour in the picture, as it were. And it's not necessarily down to malfeasance or just daydreaming. It's just it's all context bound, right? There are things that are going to affect day-to-day operations of any business, and so you'll be able to sort of make those comparisons, whether it's the war in Pakistan or what the Trump administration did today. What they did isn't really necessarily relevant. It's just that something happened and that affected the S&P 500 for 24, 36 hours, whatever it may be. And it's no different from a small business or a startup. There are certain things that are going to make an impact in a number of ways. And like I said, it's the more detail you have, sometimes the less informed you are, but it's being able to find what's relevant and connect those dots and have your own sort of some level of inference. I'm assuming that if you're an angel investor or you're a VC or family office, you've become accustomed to developing and trusting your own instincts and picking the good ones, hopefully. You have to be able to apply that experience as well. It's not always necessarily just what's in the offering document and written down in black and white. There's more to it than that. There's shades of grey.
Yeah, so it's interesting in seeing offering documents. There are the documents that you have to file if you're doing investments or securities that are filed with the state or the feds, which are your disclosure documents. Mm-hmm. Now, these, to meet regulatory requirements, are often overburdened with legalese. They are not presented in a fashion that necessarily makes it easy to understand. Quite often they require information that makes no sense, but you have to fill it out because that doesn't really apply, but you've got to put the information in. And it's not a sales document. So at the end of the day, it's very rare for people, investors, to read all the documents, particularly the filing documents with the agencies. But what you typically will have is a slide deck, executive summary, a private placement memorandum or offering memorandum. These are your sales documents in telling your story. And this is one of the areas where you have to assume that the person making the pitch is putting on their best face, or maybe overstating or being overly optimistic in what they're telling you. And even if they're trying to tell you the truth as they understand it, this goes back to what we talked about earlier today. They may not understand what they're doing. They may have an incomplete picture of their capabilities, of the marketplace, the performance of their product. And so you have to assume as an investor that whatever you tell someone as the entrepreneur making the pitch, it's going to be viewed as biased. It's going to be viewed as flavored towards whatever you're trying to do. So sometimes in due diligence, I will do a comparison between the offering memorandum and the regulatory filings, where I'll just do a quick check to make sure that they're making the same information in both places. But Michael pointed out some other things. If that business has been in existence for any period of time, then what happens is that you will see you're required to disclose your financial records going back up to 3 years of prior operations. And during this time, these, from a profit-making standpoint and a startup, these may be ugly in terms of losing money, things not moving in the way you want, but things moving slowly, but they are records that have been provided to a government agency. So you may say, I want to see your records. And then if you're a little bit twitchy, you say, I want to see your tax filings that you filed with the IRS, because you may lie to me today and think it's okay, but lying to the IRS is really a bad idea. So, and so if you're looking at a corporation, it might be their corporate filing. If it's a limited liability company or partnership, then you'll have your partnership filing. If you're a charity, there's what's called the Form 990, which is a filing made by the charity that is a public record, which helps you evaluate the charity and how it's performing its work. Now, they're not making a profit, but they may have a surplus of revenue. But you also see how much of their money is going towards programming relative to how much is being spent on raising money and doing other things, which have are necessary, but you want to keep them in the right ratios. So there will be documents out there that you can ask for that are in the hands of third parties that have been filed and which can help you guide you, and you want those ready for show and tell. There's going to be other documents that are in-house, which like any of your prior major contracts with the customer, any of your prior offering documents, your registry of ownership called the cap table, who invested when and how much. And as Michael pointed out, if the company historically repeatedly files things late or incomplete, this is not a good sign if you're an investor, because there are things that you have to do, and occasionally things are late or have to be reset. But if it's done all the time everywhere, then you can pretty much expect as an investor, this is a habit that's going to continue into the future. So Sean posted up another comment, and he's praising Michael. So I want to make sure we get this on the screen. It says, Michael, you are so right. I recently did some consulting for a startup, and he was painting a pretty picture, but didn't have tax filings or other documents in order, and in turn ended up getting turned down by several possible investors. And then it says, get that paperwork in order. So you can't see all that in the box, but that's the end of the quote from Sean. And this is one of the things that entrepreneurs need to understand. Here's an investor standing out here looking at this project, this enterprise. What are they going to look at? Well, one of the easy things is let's just see your books and records. They don't necessarily care that you're not making a profit yet. They may not care this, that, or the other. They're just looking at the books to see if you are keeping your books and records accurately. You're keeping them up to date. You're acting like a business and not like a hobby. And that therefore there's a guess that if they're doing that work, they'll treat my money with greater respect, with greater, handling along the way. So these are the kinds of things that I start looking at, and if it turns out that they're going to be in the healthcare area, did they file paperwork with the FDA, or do they need a license to operate as a contractor? All these different things that show that they're towing the line, they're trying to work within the rules and the laws that are out there, may give you that kind of feedback that you can get about the business, and is it being run as a business where you can feel that they can work well with your money. So, Michael, what else would you think that we should be talking about today that you're looking at any business out there and trying to figure out, are we seeing what we need to see? And no matter what the pitch is, how can we verify any of the information in that pitch?
Just to circle back previously, right at the beginning, you talked about what kind of money, where does it come from, how is it coming in, when and where, etc. And you mentioned crowdfunding. So like relative to the risk in terms of like the size of the investment, crowdfunding platforms will do a lot of this due diligence for you. And that's where they sort of come in as the middleman to ask the follow-up questions. But it's as simple as asking follow-up questions. So don't take everything at face value. Can you prove it? Okay, I'm 6 foot tall. Here's a tape measure. We can verify that. Follow-up question: is that in shoes or not in shoes? Am I standing flat barefooted or what? So. There's nuance to it in the way that you ask and different things, but essentially, like another example where company claims to be a professional sports team, for example. Simple follow-up: how much are the players being paid? Now, the answer to that will determine the truth of the claim that you're professional or not. How are they getting paid? When are they getting paid? Where are they getting paid? And so on and so forth. So it's just keep digging, and either you'll strike bedrock or you'll strike oil.
Yeah, no, and similarly, I was at a program last week on impact investing. And for those of you who are not familiar, impact investing is where you anticipate that a project, a business, or something is going to create a benefit to the community, a social benefit of some particular kind. And this is of value to people. So whether, if I was trying to create a cure for cancer, that would benefit everybody who suffers from cancer. And I do support charities in this area. But if I say my impact is going to be that I save so many lives, or I reduce the cost of treatment, or something, there should be a way to qualify what that outcome is. And when I talk to people about impact investing, and most of the work I do, I try to emphasize, try to amplify the impact to the community, to the world. I ask myself, how can I quantify the outcome? And I'm constantly disappointed by businesses going, oh, we're an impact company. I go, well, what do you got to show for it? And they show me their tax records. I go, that's your financial return, but what is the impact that you're having? And they're not capturing any of that information. And if I were an impact investor, I would come to them, and this is where I see the fall down so often. I go, well, if you're an impact company, what impacts are you having? Can you tell me how much or how well, one or the other, or both? and there's no information. And even in the pitch documents, they go, well, we're an impact company, and they fail to talk about the impact. I kind of made the comment off the cuff to somebody at this event. I said, well, you can't manage what you don't measure. And this goes for impact. So if you think that the investor is going to be motivated to any extent by the potential impact of your organization, your company, your project, and particularly if it's a charitable type of thing, you need to have information on that. And that information, again, is more valid if somebody else is verifying, validating that information, and it's not just you talking about yourself and what you're doing. But yeah, I've even worked with some groups trying to come up with some scorecards, understanding that sometimes impact is in the eye of the beholder, meaning that Michael may think something has great impact and I think it has no impact, and vice versa.
Yeah.
But if I'm trying to quantify, qualify what that impact is, and I have that data available, and if I can get somebody else's scorecard or scoring system or evaluation, then that means I'm that much further down the road. And if that's what somebody cares about, I want that information sitting ready to go, oh, you want to know what my impact is? Well, we hired 20 new people in this community, which helped the economy. Well, how do I know that? Well, here's our tax records. It shows our payroll. It shows how we achieved that. Here's the level of pay. Did we engage in workforce training of our staff? Yes, we did. And here's the educational programs. Here's the number of people participating. Here's the number of hours. And it may not be dead on as to the type of impact somebody's looking for, but there are things that show that you're working in that area. So it is more information that's available about the company and what it's doing. And you as the entrepreneur, you really, before you start your capital campaign, when you've identified who's the most likely to invest, who has the greatest motivation to invest in your organization, your company, you really need to ask yourself, what do they care about? ROI is always, one of the questions, but more importantly, getting their money back. But after that, little return on investment. But what else do they care about? And if they're going to care about anything else, you need to have information about that available to share with them. And if it's a strong point, or it's the only reason or the best reason why they're going to invest, then that needs to be in your documents. And all the verification, validation you can put into your documents, in your pitch, your offering memorandum, need to be there. So Michael, we've been working a lot recently, talking recently about youth sports and the need for funding in youth sports. And it raises so many questions about, as you say, real data and data that you see in the press, in the media, in marketing studies from authoritative sources that is inaccurate to the point of being false. What do you do when supposedly the outside sources of information are putting myths and fictions out there that people quote in their offering documents that may be so wrong that you shouldn't rely on them at all?
This kind of connects to what the youth sports question kind of connects to my final thought in terms of impact. First things first, you've got to do it in the right sequence, right? So you have to qualify first. That means define what it is that you're achieving in terms of impact. So just being sarcastic, but, oh, we're an impact company. Oh, what do? We sell crash test dummies. Completely different meaning to what you're thinking in terms of social benefit, right? So you have to define it. That enables you to qualify whatever the impact is that you're achieving or searching to achieve or seeking to achieve. whatever it is you want to accomplish. Then it becomes measurable. And it becomes measurable because once it's defined, there are certain activities that go along with that contribute to the impact. And you might be able to break that down into 1 way, 10 ways, 100 ways, but those all become measurable. That speaks to sort of the youth sports piece, with companies trying to raise money and do certain things where, for example, my passion, obsession, I think obsession is the right word, but say in rugby, you'll see offering documents and claims for various rugby businesses. It's the fastest growing sport in the US and so on and so forth. They have a bias, they have a vested interest in painting the best picture. Rugby hasn't been the fastest growing sport in the United States since 2016, and it's relative. If I go from one person, because you can't multiply 0, to 10 people, that's 1,000% growth. That's the fastest growing sport. But again, then you have to quantify that, put it into context, make sure that it's relevant. If I've lost my train of thought there, sorry.
No, but we're talking about information that is put out there that is technically correct, but out of context, when it's out of context, it's technically correct.
Yeah.
In context, it's completely false.
Yeah, and I remember I picked up my train of thought. Sorry. So it's critical analysis that comes back to your own experience or inference, but really it comes down to, am I going to believe what you say, or am I going to go to an independent source and verify it myself? So, for example, there are annual reports that, say, USA Rugby has to submit, where they list all of their revenues, and that's based on the number of members and so on and so forth. So they provide that data. If you're talking about sport more generally, you can look at studies from the health department or local school boards or the Aspen Institute, who do their conferences and studies annually. If we talk about, say, for example, youth sport generally in the United States, now youth sports in the United States generates more revenue than the NFL. And you could say, or people do argue, that youth sports participation is growing, or youth sports is growing. At the same time, so is childhood obesity and inactivity and type 2 diabetes and so on and so forth. So those two things can't necessarily be true at the same time, because you've got an increasing health issue within part of the population that is only a result of poor nutrition and inactivity. So if more kids are participating in youth sports, why are they all diabetic?
Yeah.
Or why are more of them diabetic? So now you've got conflicting information, and you need to then ask more follow-up questions in order to be able to verify the information or the claims that people are making.
Yeah, no, that's a good statement, is that if you look too closely at a business, it may all look like it's correct. But you need to kind of step back. You got to look at it from general business practices. You need to look at it from industry practices. You need to look at it from market standpoint, the customer, the consumer standpoint, and go and do all these pieces fit together. And quite often, I will see a deal that comes to me, and I go, this doesn't make any sense. And we even get into arguments, which sometimes get a little bit more emotional, where the entrepreneur is vigorously defending their business proposition, and I'm sitting there going, I cannot see it. Now, that doesn't mean it doesn't exist, but I can't see it. And if I am a more normal representative of what an investor is looking for as I'm asking my questions, then this entrepreneur has a major challenge. They're trying to tell everybody that the world is flat, and you're going, but I think I can see it spinning, through a 24-hour cycle. Or they'll go off on well, this is a terrible thing and it's causing all these problems. And I go, do you have anything to back that statement up? And you see this a lot of time. And I go, well, this is causing that. And I'm going, I don't see the relationship between the two. You might be right, but I don't see it. And if I don't see it, then why would I invest in it? Why would I do anything with it at all? And along this path, as an entrepreneur, as a community leader, charitable organization leader, if you're pitching for money, your credibility, that is how you're viewed, how honest, how accurate you are with the information, is one of the greatest things that the investor looks at. The trust factor has to be there. And if I listen to someone, I go, this guy is really smart, good. This person has a business opportunity that makes sense, good. This person can do something with my money and convert it into something valuable, create that benefit, that outcome, good. But if I ask a question and I get a dumb answer, I immediately start asking myself, is this person really understand what they're trying to do? Because if they don't, I have no faith, no expectation that they're going to treat my money the way I want it to be treated, and I won't invest. And I run into this a lot, where somebody says, well, I'm going to go off and do this. And I go, fine, what's your experience? Well, I don't have any. I said, so you don't know how to run a business? Well, I can figure it out. And I says, yeah, you can, but not with my money. I'm not paying for your PhD in stuff. Sean has got to run, so I'm going to say a quick, got to run, headed to coffee with a new partner. Good luck with that. And you're welcome. Happy to share information, and we'll be talking again soon. So it really does, when the investor is talking to the entrepreneur, they want them to be the expert on their business, on the market, on their products and services. And any question that sheds a doubt or creates a doubt about whether this person is putting the time, they understand what they're doing, what they're going to accomplish, that creates hesitation. And investors take almost no problems whatsoever in terms of how they will pull back from something. They can get spooked at the slightest misstatement, understatement, overstatement of information, which is why having a deck of validation. We've got another viewer in the audience this morning. This is Emiliano de Laurentiis, Knowledge Avatars. Good morning, Emiliano. Emiliano is the source of my CAP AI avatar that's on my website at dakincapital.com. He is working with different sports groups right now, where he's creating avatars, a body of knowledge that helps the coach work with the individual players and help each of the players develop their own body of knowledge. This allows for ultimate customization of taking knowledge about a sport and making it work. So thanks for being in the audience this morning, Emiliano. And yes, we have more things to talk about with regard to some of these things that are rolling forward. Just to wrap up, this program, again, is being here to share information. And thank you all for listening. I put out a newsletter where I talk about a variety of other issues that are out there. And then I have CAP, which is the AI avatar that I've built with Emiliano's platform. And it's on my website 24/7. You can go ask it questions all day long. And then, and last but not least, I am willing to get on a phone call, Zoom call with somebody for 15 minutes and try to address a particular issue you might have. And that can be scheduled by contacting me at my email address, which I'll display here on the screen. So these are 4 ways in which I'm sharing knowledge, but I'm always happy to go beyond that as a consultant advisor, as a matchmaker, and try to help with particular projects. So thank you for viewing the audience today and listening to the show. It is recorded. This episode of the Successful Funding Show will be available for later viewing on LinkedIn and on YouTube. And so if you didn't get a chance to watch the entire show, you can go back and listen to all of our comments, and we'll just go from there. So anything else, Michael, that you'd like to leave with our audience, with our viewers, before we close out this discussion of fact-checking on today's Successful Funding Show?
Yeah, it was interesting because you went straight to where I was going to go to in terms of talking about credibility. Not only is the question, is the business what it says it is, does it do what it says it's going to do, and so on, but are the founders or the people involved, are they who they say they are? What qualifies them to make these kind of judgments? And I'll just give you an example, but there's a business in operation at the moment where one of the lead consultants has twice failed in the same industry, but claims to be an expert because he succeeded in an entirely different industry. Well, it's not relevant. So what qualifies you to make decisions and spend other people's money in this industry, in this setting, in this environment, when you're not an expert? You know, if I'm talking to you about raising capital, that's because you've got various degrees to back up certain elements that are necessary and decades of experience. Those are good signs to have. But you also, like I said, have to critically analyze and say, well, yeah, you might have been successful over there, but how is that relevant over here?
It may or may not be relevant. And this is the thing. A brand new venture, any new product or service it's an adventure. It's an opportunity. And it may be that a little or a lot of what's been done in the past is useful in this new adventure, or it may be a brand new experience where we're so far out there that everything we're doing is new, and there's really no way to judge. So in that case, a lot of times,
literally making it up.
Well, we are making it up. But the thing is, then, as you look back to the experience of the individual, like they refer to entrepreneurs as jockeys riding horses, and they go, well, how many races have you been in? How many horses have you been on? What's your level of experience? Because if you've never done it before, it's really hard to assign a capability, a projection of what's going to be the outcome. Whereas if you've been on 10 different businesses or 5 different businesses and so forth, then they're going, okay, whatever you learned there, it may be a new industry, new market, but you understand some of the elements of operating. You understand some of the surprises that you may encounter along the way that can make this more of an adventure than you wanted. So these are all things to look at. If you're, as we've talked about, if you're an investor, do the fact checking, do a reasonable amount, and watch and see and look for consistency in the information that demonstrates that the person in charge, that the team that's leading this effort has got their act together and they understand who you are and they respect you. If you're the entrepreneur, get your information together, anticipate these kinds of questions, and be prepared to deliver them quickly, precisely, as needed, when needed. Don't dump on them with a gazillion pages, but give them the information they're looking for. If you have a question about what is involved in due diligence, what kind of things you look for, you can go to CAP on my website. This is a QR code where you can ask CAP questions about raising funding in entrepreneurship, and you'll get basic answers that represent my work and also access to ChatGPT and framing the answer. that these can help you move forward. So with that, thank you, Michael, for being with me today on the Successful Funding Show. We covered a lot of very interesting insights as to, fact checking an organization, verifying what it is and what it's not. And the very important and most important thing is all of this from an entrepreneur standpoint is about building trust with the investor, forming a long-term relationship where both can benefit and win. And that all starts with having your facts and your information together and ready for show and tell. So,
well, and again, that just without overcomplicating it, that might really be as simple as a resume and references. Employers do it regularly, right? Not everyone starts out as an entrepreneur when they enter the workforce. So I'm assuming that we all have a work record. That's an easy thing to verify and fact check. Is the person who they say they are.
Right.
And then you move on to the business.
Yeah. That's why, we start with all the team members, then we go to the business, then we go to the products and services, and then we go to the marketplace. So we've got a couple more episodes that we're going to do a deep dive on fact checking and getting in the best possible position to pitch what we're trying to do and raise the funding we need. So with that, thank you to everyone again. We'll be back here next week on Tuesday, 8 o'clock Mountain Time, 10 o'clock Eastern Time. And we'll be talking about funding on the Successful Funding Show. Take care.
Thanks, Carl.
Yeah, Mike, hang in.